Hello and welcome to Weekly Open. I'm Brian, here with Don and Cred. We started halfway through the song. I don't really know why, but that's okay. Let's say thanks to our partners over at FTX. Go to weeklyopen.com/FTX where you can trade today directly from one asset to the other. It's super easy. You can track your portfolio as you've always known and loved, trade with zero fees when you're on the FTX app, and you can also use a lot of other FTX products. They even got stocks these days. Check it out at weeklyopen.com/FTX. Thanks to them for being our partners. Let's get to the show. All right. So let's see here. On a little different setup this morning after a move. Don, you're on the left of my screen. How you doing, bud?
Very good, very good. Pretty tired, all things considered. It's just been a lot of traveling around, but glad to be back home for at least 2 days, and then I'll be on a road trip for the last 3 weeks of the month. So,
man, sounds good. Sounds good. Cred, how are you?
I'm doing well. It's nice to catch Don on a holiday from his holiday. We're grateful for his appearance here. I've been well, just spending some time with family and watching markets and seeing if we're going to lose all of our ETH in the merge, or all the usual suspects as far as my end goes.
You know, until this very moment, I didn't actually think of it as we might actually lose ETH because it goes so poorly. You know, I just was like, the number, the price might go down. Didn't actually think my coins might not be safe, but thanks, Cred. Appreciate that.
You're welcome. You're welcome. Yeah, it's just one of those weeks, you know, big week. And we're starting to see kind of that narrative develop further with exchanges starting to signal their support for ETH proof of work. So it's definitely exciting times ahead, especially if you've never traded a contentious fork before. You know, I'm sure we can talk about some of the stuff that could be relevant and could come up, but it's definitely kind of a very volatile and kind of exciting part in the market for sure.
Yeah. Well, since last time we talked, Don, you had been trimming some off a little bit, but also we're not bearish by any means. And we had talked about how it was definitely a point of local resistance, but at least this morning we're acting like we want to have continuation of the upside. Do you think it can last?
Looks pretty good to me. I still maintain the position I had last week, which is basically the moment we hit resistance on the S&P. We will kind of probably calm down a little bit, and but there's still a little bit to go, right? So this being 3, 4, 5% off means that Bitcoin can easily go a little bit further as well. And yeah, I think that's basically how we're gonna trade. The moment the S&P hits resistance, I could see Bitcoin do the same, basically stop this kind of slow move up, actually pull back a little bit, but I'm still bullish. The only thing that, like I said, that I sold was Sol, and I still have a bunch of it. I just sold the position that, I mean, my Solana position was too big. And so I was just I don't want to have this much, especially when you're not at home, right? At some point you'd be because the thing is Solana at support, right? At 26, 27, that is pretty comfy to buy. And then when you go and buy and hold, so you don't have to kind of think about it, because it's pretty obvious that it's going to bounce. And even if it doesn't bounce, it's not going to just completely disappear on you. But the thing is, when it goes to resistance and you start leaving, it's a little bit less comfy, because you don't want to give all this back, right? If you bought a bunch of it, the 27, 28 or something, and it goes all the way to almost 50, and you then go on vacation, come back to 30, that would majorly suck. And that's not what I want to do, even though I think it can go higher. So that's why I sold a bunch of Solana. And I could see myself sell a little bit of ETH in the next few days. So I'm going to leave on the 10th. And I'm thinking about lightening up on that as well, because it's at resistance now. I still think it's going to go up, but it just makes sense, right? You buy I bought 1.2K, I bought 800, or a little bit above 800, obviously, because it didn't all the way go down to like 800, but like very, very low, very close to the bottom and like pretty close to the top of like that daily candle, basically.
Yeah.
So like for the people that don't remember, like I bought here and then I bought a bunch like here, basically.
Let me clarify my bottom buys for you guys.
I mean, this isn't the bottom buy, right? This is like, I was made fun of for the 1.2K.
Let me zoom in for you, plebs.
But so yeah, I bought 1.2K, went down a shitload further, and then I bought pretty much the bottom. And I'm not willing to give all of that back, so I'm gonna trim some at this resistance most likely, unless we just completely giga pump it today, because I'm probably not gonna close positions today. Today's my first day back, so like I want to see how the market acts. I want to see like how everything is looking, and then I want to make my decisions. So yeah, that's kind of my positioning update. So it's all still the same, which is pretty nice given everything's up since I left. But it's starting to close in on some of these areas that I originally targeted, right? There's a reason why I said I want to see ETH go to 1.8K when it was trading at 1. Now it's at 1.8K. And if I wasn't going on vacation, I'd just blindly hold, because I think this is a really cool setup where we could easily go to like just double again. And you just look at this kind of setup, right? You have like a range, you fall out of it with massive liquidations, basically. I mean, funds just blew up, and then you come all the way back up and you're now at that resistance. It makes sense to take off at that resistance, but there's a good chance that it plays out like Bitcoin did at 6K, right? Where that's the most obvious resistance, but it's still doubled from there. And I could see the same thing be true, like obviously this, right? Where we rallied into it. And I mean, that was the obvious place to take profits on your buys. And then you see it go from 6K all the way to 14K, right? And I could see this ETH do the same thing into the merge, but I'm not going to be around the next 3 weeks. So I'm definitely going to be like taking some profits on that, I think.
Your little green line is a little tighter than mine, but I've had that kind of yellow box. This is the ETH version of that one I've had on the Dixie for so long. And when I was looking back on this, it was so weak there, just as it was funneling down, even after so many weeks of down moves. And now we're just coming right back into it. But I think it's actually kind of ambiguous in terms of where does it actually stop. And I think it gives some credit to your point about we'll probably just stop wherever the S&P does, like merge or not. Whatever, Bitcoin's kind of doing its own thing, not near as strong as ETH. ETH is almost double off. I mean, no, it is double off the bottom. It went to like 888, right? Like something in that range. But I think we could push into the 2Ks, like low 2Ks. That 20-week moving average is always a fun place to dump off of for these kind of bear market rallies like we did in April or so. It is depressing to me that I have can look back on some stuff that I had where I was like, all right, I just set my bids for $1,000, from this yellow box, right? It was so weak. And then I didn't play that trade near as well, because if I just had all the capital that I had back when it was there the first time, I would have been in such a better position versus having taken some trade from this. Like, this is around when you and I hung out, Cred, like when I was in that 1800 range, and I was like, I don't know, maybe it's going to like scam off these equal lows that it's held a billion times. Surely it'll hold one more time, right? Cred, what do you think? I mean, do you think the market is having a healthy bounce, or like something that could actually have continuation, or do you think it's a game of chicken at the moment?
I think it's healthy enough. I think it's a game of chicken. I think there's definitely, at least structurally, there's room for another leg for this stuff to like push deeper into that yellow box, for example, or into Don's resistance, whatever it may be. There's kind of TA space when it comes to that. I think that's also reflected in the S&P 500. Like most of the decent macro lower high resistance levels, it depends how you draw them and define them, but we're sort of, there's a bit of space there, and we're sort of pushing into, the last significant weekly high at the very least. So technically speaking, there's space. I mean, I was looking at the market before we went live, and it's the classic thing of AMC and GME were both halted because they were ripping faces. And that's just not the type of thing that makes me like structurally, macro, whatever, particularly bullish. It just reminds me of kind of, when a counter trend rally gets far enough, people get complacent enough to pile back into junk and inevitably end up getting burnt or upset. So that's sort of not where I want to see strength as far as market, allocating at this point in the rally. I think one interesting question to ask is like, at what point, like how far does the market have to go for a lot of participants to switch their mindset from bear market rally to some sort of like bull market reclaim? And when they come to that conclusion, that's probably the best level to sell, right?
Yeah.
Like as is usually the case, when you lose sight of the context and the structure and decide that there's a new trend shift, a lot of the time that happens at those kind of big extremes where where you shouldn't be forming those types of conclusions. I pretty much agree with Don on ETH technicals and whatever else. It's like 1.7 to 1.9 is that big shelf structure, whatever else. You can push into low 2Ks. I think all of that is reasonable as well. But again, purely contextually, on the way down, everyone quite firmly agreed that this is like a downtrend and there will be counter trend bounces, etc. And now you're going to have, more than a double. Right? Typical, right? But like contextually, you're going to have like 1, 2, 3, 4, 5, 6, 7, 8, maybe 8 green candles in a row into an area of high time frame resistance. It's very like narrative sensitive and off the back of the S&P doing well as well. If any of those cards fall away, I think, the swimming naked analogy will become pertinent pretty quickly. I'm not looking to short any of this kind of stuff. I couldn't care less about that part of the market unless it gets really, really crazy and just starts pushing into absurd levels, which would be much further from here. But as far as long positioning type of goes, I think at the very least, as we expressed in the last show, you're going to get a period of lower volatility towards the end of the year. I think it's like a reasonable prognostication to make, and it would be very much in line with what you'd expect cyclically. And if you want better entries, a lot of the higher lows that are likely going to be established, or even just like range bound plays, I think, there's no rush chasing this unless you know what you're doing. Maybe that's just sideline cope because the 200-week MA reclaim on BTC was so clean that wasn't on board. But I like cyclically, timing-wise, and structurally, I'm not terribly attracted to this at the moment.
I think it could. I mean, I think you could be right about the 200-week, and that's why I have it pulled up right now.
Mm-hmm.
We could just grind along it for like a year. So so many times people just expect like, oh, you hit it once or you reclaim it and then just turbo moon from there forever, or you get rejected by it and doom. It's still the average of almost a year's worth of price. So most of the people in that range therefore are kind of break even, right? Like over that period of time, assuming there was linear buying throughout. But you don't have to just like trend super hard off of it. And I think I've kind of come more and more to the idea, whether it's crypto or stocks or whatever, it's just that I think this market could just punish trend followers, people seeking some big narrative like, oh, it's a definite, absolute going to be a recession, where all we've met really so far is the technical recession, even though the White House is fighting that even. And what we could really see in my mind is just hurt everyone, like just significant amounts of sideways, people that are trying to take big positions to the short side or the long side get chopped up. You range just far enough outside of all those boundaries to make it to where you like change your decision from before, like I will absolutely not buy until Bitcoin is 12K or whatever, or it's going back to 50. And we just don't do any of it. And it's kind of the same thing as Don talked about with the crab market, except we do it from lower than before, right?
Yeah, I could totally see that. I still think there's a world in which we just go sideways in this entire region, which would be brutal to trade. A lot of people would be like getting chopped up. I think if Bitcoin goes anywhere close to 30K, you're going to see a bunch of people actually come back in again. It's just how this works, right? Whenever prices almost double, for some reason, people just get interested again. It's the same with ETH right now, right? Where they weren't really interested in ETH when it dipped below 900. It wasn't like at 1K or like, we still have time, right? Well, now it's at 1.8K and people are like, what if it reclaims this resistance, right? What the fuck do I do then? Instead of asking them, okay, what am I going to do if it rallies from like 800 to 1,000, whatever, people always just kind of like assume that trends will go on forever. And then once it starts, like you get like a big bounce or something like this, where it's like, is it 2x enough to reverse this trend? Is something that a lot of people will ask themselves, right? Because you don't really see 2x's in a bear market, is what normal people would think. Now, we've seen a bunch of these in crypto, but it's still like, this is where you start wondering, was I actually wrong in believing that this bear market would last for a while? And I think if it does kind of rally a little bit further, people will assume that they were wrong and then just jump back on the train with, and would probably get sold into. Like, I would happily sell into people like that. And yeah, that's just kind of like how this looks to me. But we have the best narrative on ETH, right? So like Bitcoin, I'm pretty sure I'd be very, very surprised, just even looking at this current price action, if we went anywhere above 35K. Like, I could see 35K-ish. I wouldn't be too surprised, like if we just from a grind up like this popped up. But I think that would just kind of lead to bleed out. With regards to ETH, we have the best narrative there is, basically, for the next month or two. So like, I don't want to make the same call for that, because I think ETH could do much, much more. The ETH BTC setup, same day, like you have a lot of room to go. Look at this kind of like breakdown where you broke support and then immediately just reclaimed it all. And where does this go, right? Where does ETH BTC go? And the answer to, yeah, I mean, the answer is like, this is still very, very close to all-time high, right?
Yeah.
And it struggled with the last resistance before all-time high, because I mean, you could argue getting anywhere close to 0.12, I mean, that's close enough to all-time high already. Yeah. And then it's kind of like, we're in this spot where ETH is really, really close to these kind of levels, and it's tested the last line of defense, broke down from it, and that was a false breakdown, right? So for ETH, I'm pretty optimistic, in the sense that I think that you could have much, much larger returns than Bitcoin. I don't think it's going to last, though.
On the ETH BTC side of things, and you said you don't think it's going to last, but I guess a different way to frame the similar question is, with all the macro concerns and whatever, do you guys think, Cred, maybe you got some thoughts on this, do y'all think that ETH is small enough to live outside of the macro stuff? Like, crypto itself, I think, is a bit too big as a whole, like maybe whether it's total market cap or people that use Bitcoin as their, barometer. But is ETH small enough, with its own narrative being strong enough, to live outside of whatever macro fears exist and kind of be its own little unicorn?
I think for a limited time, yes. Structurally and overall, and in terms of large secular trend, which needs inflows, probably not. It ends up being one of those balanced answers where even among altcoins, we've seen like very small windows of like dispersion and whatever else, like counter trend rallies or certain sectors doing really well over short periods of time. And there is space for that. But overall, I think that, the market has shown quite clearly that any meaningful secular decoupling, dispersion, decorrelation, all these D words, there's just a real absence of evidence that crypto can play on those terms at the moment. When there's enough downside, especially when there's this whole contagion, spillover, incestuous lending situation, it's all the same correlated basket of shit. And you get windows where it isn't, but overall, the bigger trade is still the high correlation version of it, I think. So I think Don hit the nail on the head, where you kind of have to look for those asynchronous, outstanding narratives, which could attract, idiosyncratic flows or like outlier strength, whatever else, but you don't take them for granted, and you don't assume they're going to stick around. And you see that as like an outlier event that's going to kind of mean revert eventually, especially if the larger tightening conditions are still, opposed to healthy markets and number go up.
So it sounds like we basically all agree that we're at resistance, and that further moves up are ones to be sold into. Do you think there could be some cyclical rotation where, ETH or BTC or whatever's been moving starts, just churning sideways or moving a little slower, and you go down the line of risk?
I mean, for me, like just looking at this, right? Like this slow crawl this is exactly what I wanted, right? For Bitcoin. It's just my problem is that it's basically just so much in line with the S&P. That makes it pretty difficult. Like if this was completely a market on its own, this is the best it could look. To like your point of selling the next kind of move up. But if it accelerates at any point, I think that's what you want to be selling into. So if you get a pump from 24 to 30 or something, I think you'd want to be selling into that. Maybe not into the first move, like what usually happens. Like if you get a candle like that, you get a candle, you get like a little bit of sideways, you get a smaller candle, and it runs out of steam, and people realize, okay, they just might have bought the top, and then it keeps on bleeding out. That would be like something that I would definitely want to be selling into. Now, with regards to the rotation into like something else.
Like I'm looking at some of the consolidation that's existed in things that pumped early before, like the DeFi, like OG DeFi type stuff, for example. If you look on 4-hour daily charts, they're pretty well consolidated. And on a day like this where, ETH moved pretty hard. And so if ETH spends the rest of the week kind of dancing around sideways, I wonder if some of those other smaller items can move.
Yeah, I think in general, it's an ETH market in that regard. So if ETH profits,
what was that chart that you just had up? I couldn't see the name.
Atom.
God, that's death.
Let me see if I can find it again.
Was it Atom relative to ETH or something?
No, it was Atom to BTC.
Good Lord.
Here it is. This is the chart. Beautiful.
Man.
Don,
we actually
why
talked
do
about
so many
this.
of your charts? Sorry, why do so many of your charts have those like Twitter flex links? Did you come back from holiday? I was like, right, let's see who had the shit takes. Let's see my bottom tweets. And let's see who to take to the cleaners.
Dodge just like Control V.
Control V. Yeah, literally.
So like the reason why a bunch of these have like the links is because I wanted to like I made that one tweet where I said, okay, this like these 6 cryptocurrencies or whatever are gonna go to like a higher price. And I needed to see like what price I actually tweeted that at. That's why I did that. And then I think I had one tweet of Altcoin Psycho on, which kind of talked about macro. And someone sent that to me and was like, hey, like every time someone talks about macro, prices go up. So yeah, that's why I have like a bunch of tweets on my charts. It's not because I'm trying to say anything or any.
Man, just
it's a little bit of
holiday on his bottom buys. Like, let's see how right I was visualized. Like the P&L isn't enough. Seeing the numbers isn't enough. I need the Twitter plus trading view for it to make sense, and only then will I be happy.
I mean, it's kind of how it goes, right? I mean, why be on Twitter if you're not doing that? If you're not,
I wouldn't know.
But yeah, with regards to kind of like rotation, right? So I think it's an ETH game basically. If ETH doubles here because of the merge, and I think there's good chances that like any of this happens, right? I could legitimately see ETH go to 3.6K. Wouldn't be surprised at all. I think like in these kind of circumstances, with the market being like it is, it's not really surprising, right? I wouldn't be surprised if it got rejected at 1.8K and like kind of like walked down a little bit, but I think the upside can be quite large still. And if it does that, I think we're going to see a bunch of rotation because basically people are like, okay, I missed ETH, let me get something else. And I think they're going to get completely rinsed in whatever they buy if they don't immediately sell it. So basically like you get these kind of rotations, ETH doubles, and then you get like whatever Solana or like other altcoins that go up like 50% as well. And I think that's going to be the pump that you have to sell into to not get completely rinsed.
I would call that kind of door number 2. The narrative I still like better is the one that fits with what's already there. So with ETH being merged narrative, I like ETH derivative stuff, not like ETH alternative stuff. I think people are going to chase the ETH alternative stuff when, in my mind, like, and I'll share one. I owned it. I sold it around these levels to be a rotator, but I want to own this again. But anybody in the chat can buy it before me. It's not like I'm trying to pump my bags at the moment. But looking at Uniswap, just this daily consolidation that looks really, really strong, like just kind of a classic if you're a chart pattern guy, ascending triangle type of thing on a 4-hour time frame. And it's like really nice levels wise in terms of recapturing, its prior breakdown. Even if you go all the way back to the origination of Uniswap, it's kind of where the market liked it price wise, dollar wise back then. Flipping the 200-day moving average, seeing like a fast moving average, flipping a slow moving average. Kind of, if you're doing a moving average like lesson, like this is a great chart to show for that. Like this is a recovery and a trend flip and opportunity for continuation with like limited downside, right? So like you just piece out of this thing if you lose like $8 or something like that. And on the upside, like you might be able to just ride that trend for a while and might be able to get $11, $12. Like
looks
50,
like it could go even
like,
higher. To
yeah,
me.
like 15. I kind of like it there, 9 to 15. And that, in my mind, that's like a hell of a trade that I would just really be happy to take anytime. I could be completely wrong. Like this could be one of those fake patterns that looks good on one time frame, but you get to the higher time frames and it looks like it's too soon, But I like trades like this, and in a market where I don't know what the hell is going to happen. And to your point, ETH continues to look like, ooh, maybe that's the slightly harder trade, or it'll slow down a little bit. I want my high beta in something like this, and yes, I can absolutely get rinsed. To your same point as before, like I'm probably not going to hold this for like a year and try to get $30 again, that kind of thing. But as a trade setup, I think it's worth taking if you're managing your risk decently.
Yeah, I think it definitely does. I said like I could easily see them go up 50%, right? And 50% is basically your target levels, right? If you look at 9, 50%, that's going to take it into like 13, 14, 15, which I think just makes sense on a lot of these. It's just holding the moment. I think sentiment flips, because sentiment like is really just, this is a bear market rally, right? The moment that changes in any shape or form, you're going to be in danger on altcoins, I think, because then people are going to do the last bit of buying basically, and you're not going to find new buyers, because let's be real, I don't think there's many new buyers. This is like a rally of people.
We're selling to each other again.
Yeah, we're kind of trading with each other, right?
Yeah.
It's not like the market has expanded or anything. If anything, a lot of people have left, and it's still the case. And I don't think that's going to change. So basically what's happening is that like people that were really late to sell the bear market sold the bottom to people that were early to sell the bear market. And now those people that sold the bottom are just basically forced back in, because oftentimes the people that believe the biggest, are the biggest believers in this stuff, they sell when the pain is really, really high. They don't sell otherwise. And then they really want to get back in, right? Because they're like, holy shit, I really believe in this. I sold it. I'm an idiot. I should have just held. And then that's what they start thinking when stuff goes up 50, 100, 200%. And then they're just like, okay, this time I'm just going to buy and hold. And that's going to be where they get completely fucked again, right? And I don't think that has changed. I think still it's a PvP kind of environment. So you kind of have to see where the pain points are. It's just a lot of this stuff is down 90, 95%. So those pain points, you can bounce a lot and still be very low.
Yeah, it's kind of tough because there were a couple people that had been asking me over and over again, hey, should I be buying? And I kept saying no. This was all when everything was super high. It said my same thing of wait until at least it's at minimum down 50%, and then take your time. And then I messaged a couple people when ETH went below 1,000. I was like, hey, I know you're interested. Now is probably the time where if you DCA for 2 years, 5 years from now, I think you might be pretty happy. And now I kind of want to go back to him and be like, hey, if you didn't start that already, you can wait again. The amount that things move in a month is just insane. And I don't know if you're looking to get in the market or whatever scenario you're in, it's still very volatile. And I think, Cred, you made this point earlier. It feels like the actual the cycle will start turning when you go through that time period where the volatility truly just goes away. And we haven't hit that yet. Like we've still been quite volatile.
Yeah, I'd be surprised if we had any real structural shifts or could enter into a new uptrend without that period of volatility dryness. It's actually a good sign insofar as market cycle progressions. It's not something to like shy away from. There is a distinction that's worth making, which is that the market can and is likely to bottom without retail participation, if that makes sense. So retail participation is useful for when things get really frothy and if you want to get like a crazy new trend. But retail coming back is not a prerequisite for the market bottoming, right? And I think people conflate those two. They're like, oh, well, look, the economy is so bad and household savings are wrecked and no one has any money and retail is not going to come back given they've been burned on, Luna and Celsius and whatever. And therefore crypto won't bottom. It's like, well, you don't need those people to bottom. Those people come much, much later, kind of 3/4 of the way through the cycle to give it its, final push, if you will. Then they're not necessary for the bottoming process.
Yeah,
so it's worth making that distinction. Yeah, exactly. They're kind of like mid to late cycle momentum and then exit liquidity as well in terms of the role they play cyclically. So I think looking for like the rosiest, most household friendly economy in the world for crypto to bottom is probably not necessary. I will probably do a good job without it. But yeah, as far as like easy narratives and the crazy frothy momentum and all the celebrity stuff we're used to, that is a product of a kind of late retail fueled new uptrend. And I think there's some waiting to be done before we get to that point. But that doesn't mean there aren't sort of good trades in the interim. My main concern is still time, to be honest with you, and just kind of being patient cyclically. And I definitely think kind of Don's thesis, the squiggly he made of I wouldn't be against just a slightly higher trading range at the expense of volatility. I think that'd be fine.
Can we LARP on macro and broader trend type stuff? I think last week was kind of quiet. This week, I believe there's a lot more information. I think there's a CPI print coming this week.
Yes.
And perhaps some other stuff. I personally, the thing that I keep looking at the most is just what's the Dixie doing? And if this was any other asset, I'd be looking at this thinking like that's extraordinarily weak. Like whatever that little pump was last week, not impressed and think this has plenty of room for downside. And I keep trying to be like too clever for myself. So I want to just kind of follow that. If I'm going to use that as my North Star, treat it like any other asset. Don't try to like put the narratives ahead of the chart and just, see what happens based on the chart itself. Do y'all agree that this looks weak? And do you think I'm an idiot for trying to approach it with that kind of more cold strategy?
I mean, it's been up only, really.
Yeah.
Just from like a further zoomed out point of view, I definitely wouldn't say it's weak, but like on a lower time frame, it does kind of look weak. So
yeah, like I'm sorry, for Don, a daily chart is far too low of a time frame.
I mean, if you look at it on the weekly,
monthly,
right? Or on the monthly, then it looks incredibly strong still.
It does.
But the thing is, it is up a shitload. And we talked about this last week where I said, like, it's insane that the euro or like every other currency basically has been moving so much in such a short time frame. You saw a bunch of people talk about Forex on Twitter everywhere, right? Like that's usually a sign that like whatever is happening, whatever is happening is gonna stop. Yeah, we had the same with wheat stocks where like everyone talked about wheat stocks and then like they just kind of faded away. And we had the same with like a GME. Like it's just like this kind of stuff. Like when it gets really crazy, it usually stops when suddenly everyone keeps talking about it.
Yeah, when I say down, I mean like maybe 100, 99, 98, those types of numbers.
Yeah, I think that's realistic.
Not even 98 necessarily. Like
100.
So basically, just back in that green box on the monthly.
I'm on board with that. Honestly, like it on the lower time frames, what you showed basically, I think it really does look weak. And that weekly doesn't look good either, which I think makes like it's quite nice to have this stop from being up only. It's a little bit scary when you have the dollar currency index just go and just moon. Like
I think it gives breathing room to literally every other market in the world. Like forget crypto, just talk about everything. so much stuff's been under pressure that if this truly calms down, it just allows everything else to reset a bit.
Yeah, the weird thing is though, like the S&P is up a shitload, right? Like that's the crazy part. The S&P is up a shitload, and the dollar index really isn't down that much. Now, like, does that mean that we're just gonna make new all-time highs in the S&P? I actually don't know. I wish I did, but like, there's so much room there, right? Like,
Can I give the hot? Sorry,
Yeah.
I don't mean to take over. I kind of have this hot take. Inflation is still like really bad for fiat currencies, right? Like typically, you have inflation, you end up wanting real assets. Now it can damage economies broadly. It can have like overarching effects that cause inflationary recessions, whatever. Like read Ray Dalio stuff for that. In those circumstances, like the S&P profitable companies can make all-time highs because the currencies are garbage, right? Like the currencies broadly are weak, therefore harder assets, whether that's profit, companies in profit, like the Dow might be just outperforming the NASDAQ massively as an example. Or like Bitcoin and ETH outperform, stuff with lots of inflation left on it from a crypto perspective. But you still have an environment where the S&P can go to all-time highs, or the Dow can go to all-time highs, while Peloton stays in the dregs, or while freaking Steppen goes to zero. And I haven't really seen anybody make that case that we'll see assets that are better than dollars or better than fiat. Let's just put it more broadly, have an opportunity to do well. Is that the counter sentiment trade?
I think the counter argument to that is the rate and magnitude of tightening is too high to allow for a meaningful reallocation and rebalancing to quality versus garbage. Like it's so quick, it's so sudden, it's such a change, it's so significant that the market doesn't have enough time for this dispersion, and instead everything is just part of a liquidity basket, and you don't have the luxury of choosing good names versus bad names, etc., because everything was inflated and everything relied on this easy money, and now it's not there, and now the Fed's late, and the tightening is much tighter and faster than expected. I guess that would be I think if your case were to be correct, it would be one of those in more time type of things, where with the greater passage of time, you could see a bid come back to some names versus not come back to others at all, as a feature of just market structure and market cycles in general. But I didn't see that being a sort of early or mid-stage feature of the market where we start to sort of pick winners and losers. I think crunch time, it doesn't discriminate.
What's the inflation scenario look like in Europe relative to the US? I know y'all have got a whole different situation with gas stuff and whatnot.
I mean, it's bad. It's bad. Bank of England's predicting, I think it was like 11.9 or 12% or something for an inflation peak.
I thought it was like 18.
Might be higher. It was high inflation, recession, just productivity in the shitter, just in a very rough state. Hopefully they're wrong, because they were wrong about inflation in the first place. So It's like we talked about in one of those other shows, right? It's like the people who got completely blindsided by macro are now telling us we can't go up ever because of macro. It's like some humility would be nice. Like if you got macro wrong when it started, I've got no reason to think you're gonna get macro right now that it's a thing, I think as far as UK goes, economy-wise and just macro stuff, households wrecked, government finances wrecked, Bank of England about as bearish as it gets for the next couple of years, to be honest with you. And that's the shocking part. Like we talk about price levels and where we were last summer, etc., but like a lot of this higher time frame geopolitical and macroeconomic stuff has got a time horizon of like 2 to 4 years in terms of impact and the kind of environment we're in and transitioning, etc. Whereas I think most crypto participants would struggle with a lackluster market for any period of time that would look anything like that,
What, Don? What's going on? And y'all have no gas in Germany, right?
Wait, what? We do. Not right. Like it's not like they kind of put off the gas right now. Right now, they're just worried about the winter, basically. So that's how it goes. And you wouldn't need it anyway. It's like 30 degrees, which is, I don't know what in freedom units. But it's pretty hot right now. So it's not really like it's needed too much because most of it is just being used to heat. But yeah, the winter is going to be interesting. The winter definitely is going to be interesting. But then again, like we've been seeing like prices go down, right? On oil, we've been seeing prices go down on gas a little bit. But yeah, I think that's going to be really, really interesting going into the winter. But it's not really a concern right now. Like the only differences that I'm seeing in Germany anyway has been that people waste less, as in like, for example, like public pools, they're not being heated in the nighttime. Like garbage like that makes no sense in the summer. It has kind of slowed down, obviously. But other than that, it's just living as normal. Prices have been going up on everything. That is very true. Like on
including your coins, though, which is good.
Yes. And I mean, the good thing is like when I bought a bunch of these coins with euro, so for me it's doubly good because I would have much less in dollars now if I didn't. So it went up in. I made money by that trade just by exchanging my euros into dollars, and then coins went up as well. So that's pretty nice. But yeah, it's not as bad as I've seen the media kind of portrayed as in America. Europe is still working somewhat okay, from my view anyway. But then again, like I'm not the guy that has to look at prices in the supermarket, right? So I'm probably one of the worst.
On that
people to
Zuko
ask.
freaking flex.
On that Zuko beat, you feel me? Mad.
No, but I mean, it's just the truth, right? So like, I don't look at prices when I buy stuff. Not anymore.
I did buy the bottom, and I don't look at prices at the supermarket. What else you got? Come at me. I'm that guy.
Unbelievable.
I could pretend that like that's not the case, but it's just how it is. It's so
Literal
yeah.
Zuko villain arc.
God.
I mean, I'm a duck. What would you expect? That's an asshole.
Hey,
Just
Fred.
bread and, yeah. Legit, there is a fundamental thing, as far as fundamentals go. I know it's fun to talk about the economy and stuff like that, but I can screen share some real FA, which has had historic signal. And it's the following. Raoul Pol is tweeting about ETH again. And so he's saying, I think the path of pain is higher as most participants are still underweight.
As a bag holder.
Lower entry points. Yeah. Most people expect a failure in this zone of resistance. Similar level around 2K. Let's see. But my view is the bigger battle is around 2300. And there's some sort of trend channel here. This is the funny thing. StatStar got blocked for this because he replied saying, just so we're clear, I'm more than irresponsibly short ETH right now. I now have leverage, but via puts. This is by far and away the biggest personal position of my entire life by a factor of 10 or more. Now you might think, well, is this just him counter trading Raoul or whatever else? But the thing is, he is indeed referencing a copy pasta from October of 2021 when Raoul said, just so we are clear, I am more than irresponsibly long ETH, by a factor of 10, etc. And that trade didn't turn out terribly well. So now that Mr. Pol is, path of pain is higher, some people are using that to meme on him, which is fair enough. So there's some real pasta for you.
Good pasta.
It's great pasta. And I think Bitboy also tweeted ETH is sort of better than BTC or something. The ETH greater than BTC thing.
Oh god,
I thought it was the opposite. Was it?
No, I'm pretty sure it was like a ETH better than BTC.
I mean, the BitBoys of the world, they're just gonna go where like ETH goes up, they're gonna be like, okay, ETH's better, and then Bitcoin goes up. They don't.
It's called momentum trading. Don, read a book.
It did say ETH greater than BTC 18 hours ago. All right, freaking all in BTC.
Yeah, the thing is, like with these kind of people, right? We all know, they don't trade, right? They don't like. They're just gonna say whatever. They're more often than not going to be wrong, just based on the fact that they're always gonna kind of parrot whatever the market is doing. Which, I mean, if you ever get like mean reversion, that's just gonna be wrong. But yeah, I don't think
Bitboy was like, here are my buy levels down to like some super low level, and all of them were below the current price. That was a couple months ago, basically at the bottom. So I guess he didn't get filled. So I mean, I don't know.
Yeah, like I'd be very, very surprised if he did any actual trading. And I think a lot of these people don't. They just say stupid shit, and as long as people gobble it up and then trade on their ref links, they don't really give a shit.
Well, it's just in general, when people say the path of pain is higher, it's quite rarely true, in my opinion. Like sometimes you get very specific setups when, for example, derivatives positioning is like blatantly offside and funding becomes more and more negative as price goes up, and there's a spot premium that's pretty significant during US hours. Once you get those types of really contextual setups where you can tell there's going to be just an outsized candle that kind of lifts the lid on the pressure cooker, usually with futures specific context, then you could say the path of pain is higher as insofar as a kind of feature of market structure in specific circumstances. But like in general, path of pain is rarely higher. I mean, like, look at some of these charts, right? They're down 70, 80, 90%. It's not like a few weeks going up. People will be like, oh no, this is so painful. Stop it. This is the worst thing ever. It's not the case. By definition, most participants are like spot long, net long, and then leverage long, whatever you want to call it. So it doesn't really stand to reason that that's a good sort of operating assumption to have when you're looking at positioning.
Did y'all see that Cathie Wood sold like the Pico bottom of coin?
Oh, of course. Yeah.
I mean, that's just amazing to me.
It's really good.
They were so hardcore. It was the clearest signal, honestly, to see that. And it's just boom. And then, of course, the fundamental news came along as well. Cred rugging us. And yeah, it went from like 50, whatever they sold at, like the new, because they're positioning updates frequently. It was like $52. Now it's not even a week, I don't think, and it's 100. It's like,
unbelievable.
She's one of us.
She's just like me, for real.
Yeah. I don't know that they're getting withdrawals out of their fund or something that force that, and that would also be bullish. But I just found it interesting.
I mean, they really didn't they have like massive inflows 2 weeks before? So
yeah, they'd been getting serious inflows throughout the downturn.
So I think
that chart is just so unbelievable. The ARK chart, like on the weekly time frame, is just like, I don't know. It's like some sort of crypto tower. Even on the monthly, I think makes it very clear. It's just wow. I mean, what are we doing here?
Yeah, I don't remember what I was doing with these circles, but I guess my point was generally like this fund just probably won't do anything for a long time.
It's just Head and Shoulders, bro.
Oh my god! What's the measured move target on that? Is it like minus 50?
Has to be, yeah.
But yeah, look at the volume on the way down. I mean, a lot of selling, and also if you look at their actual inflows to the ETF, it was significant. This is insane.
You've got to love when the volume bars act as support, right?
Yeah, that's intense. RIP all of retail. I mean, this was the thing to own here.
The thing, yeah.
It really was.
Yeah.
Anyway, all right.
It's nice to see that these like psychology, market psychology rules apply across asset classes and in all environments, etc. Like I saw Moon Overlord tweet some. You can get these bots which post NFT prices in like candlestick chart form, and a lot of these projects are literally just like Wall Street cheat sheet classic market cycle charts, like over and over and over again. Like, doesn't even matter if it's a new asset class, NFTs, pictures on the internet, you trade with ETH, whatever. It's like the human psychology in a bubble doesn't change, and that's pretty awesome.
My biggest difference maker in all of trading, I think, was DeFi summer 2020. I did really, really well that summer, and I think it was directly correlated to the same exact thing. Almost nobody was charting all those DeFi coins at the time because you just had to do it based on what came through on the chain, and the services to chart them were terrible, and there was only like one or two that people knew of. They were delayed or extremely hard to use, whatever. And I was like, I'm going to go figure out how to chart this stuff. I did, and they were the same thing. It was like, ascending triangle, number go up, like double top or divergence or whatever, number go down. And it was so clear. Anytime where you can chart something, no matter what it is, and the rest of the market isn't staring at that exact same chart, they're living by the emotion of it, I think you have a significant edge, because that's when like the classical chart patterns and all that stuff actually comes into real fruition. And I think charting NFTs in that way is a fantastic way to observe the market. Anyway,
that sounds really good. Yeah, I like that.
Somebody's asking me if I'm still bullish on copper, and the long-term answer is yes. The short-term, I have no freaking idea. I'm not trading copper. It's one of those where I like just am curious about it. I think inflation is gonna, even if it goes down, like I think their version of success will morph into 4, 5, 6% inflation, and then we'll just be willing to live with that for a long time. So in that environment, I think, commodities, harder assets, whatever, are very, very bullish. And that makes it harder for any kind of growth entity, like growth stocks and whatnot. So anyway, I don't have anything else. What do y'all have? What do y'all want to close us with?
Not much else, honestly. I think I'm going to be spend most of the week looking at ETH USD as it pushes into the first kind of weekly structure that Don had on his chart and whatever, just the same old 1.8, 1.9 level. Any deeper push into there, I think, is going to be quite telling in general as to what to expect, given it's more than 100% off the lows, narrative-driven, high time frame resistance off the back of S&P doing well, et cetera, et cetera. So it's definitely something worth paying attention to. I think one of the worst things that could happen structurally is getting that high time frame bullish, quote unquote, confirmation close above 1.9 on the weekly, something that looks like a 6K-esque reclaim, and then that not going anywhere. And one of the catalysts for this move just being kind of pulled out of the market and then seeing the next week or two just basically end up as some sort of failed reclaim. I think that would be one of the most weird, one of the weakest technical developments this market could offer. So it's like at resistance right now. I'm going to see if it's going to push deeper, what the weekly close is going to be like, and I kind of use that as my risk barometer in general for ETH USD. And then also, as discussed, for the S&P and the NASDAQ, at least on the weekly and also just kind of the monthly timeframes, it's getting to that point, depending on how aggressive you want to be with your levels, where if there's going to be any type of macro lower high pullback scenario, it's coming sooner rather than later. And I still don't think crypto is immune to that. So I'm going to keep tabs on that as well. And the levels are pretty much similar to Don, sort of 4,300 S&P. I mean, it could be early as 4,200 because we're at that sort of last weekly swing high now. If we get some sort of gnarly failed breakout spike, whatever type of thing, that might be enough. But like 42, 43 for the S&P, similar technical structures for NASDAQ. I think it's about 13.7 to up to 14.2s, something like that. In terms of crypto, I think most of the time it's going to have the ETH USD chart open, as I said, between 1.8 to 1930s and see what the market gods give us.
What you done?
I like it. For me, it's kind of like if you want to share my screen, it's something that I want to end on is actually that even though like I'm saying like 4.3K S&P and be a little bit careful, right? This is one of the best looking charts we've had in a long time. This kind of structure is really, really bullish, historically speaking. We've had that before. You can kind of go through the charts, look for the same thing. Where it just slowly goes up and then at some point just starts going. I'm not saying we're going to repeat what we did back then, but it's kind of funny that I'm always kind of bearish leaning, right? Like I'm always going to be the guy that looks for the market to just disappear. It's done me well in the past because most of this stuff is garbage, right? The stuff that we talk about. But just looking at this chart, couldn't really look much better. This is the optimal kind of chart to have if you want to have, like said, like a really explosive rally. So I think there's definitely potential there. I'm still gonna maintain my stance. I'm still gonna like take a little bit of profit. But just looking at this, like if I ignored everything else, I'd just be max long, just sending it into whatever. Because I mean, it could legitimately, this is like the best it has looked in a long, long time. So like I'm not too bearish. The only thing that worries me a little bit is that we have such a clear catalyst with ETH, which might sound weird, but the moment that goes away, we're gonna see whether the market is actually like strong, or if it's just basically narrative driven, and then everything just goes to shit again. But yeah, I like this kind of setup. I think you can be bullish Bitcoin unless it starts trading back below 22K. I think at that point it looked really bad, which is funny because like 22K, a while ago people laughed about that entry because it was so bad. Now it's basically the invalidation and you're up quite a bit. And I think it's the same with ETH. Like you can be bullish on this thing for quite a while. Like if it goes back below 1.3K, that'd be bad news. Anything above there, you could technically just hold it and hope that we just bottomed in general. I'm not necessarily one in that camp because, like I said, I'm always gonna sell early. You're always gonna every single rally on this chart, basically, like I bought a lot of these bottoms and I sold early, right? And I'm gonna do it again. Trust me, I'm gonna do it again. Like I sell this thing, it's gonna go to 40K. I don't really care because there's gonna be
please sell.
Please sell. Yeah.
there's gonna be another one, right? It's gonna go to like, even if this is the bottom and I sell at like 30K and it goes to 100. I'm going to have trades in between. I'm going to have like stuff that I do in between. And then it goes from 100 back to 50. And I'm going to buy 50 again and trade it again. So for me, this is all the trade. I find it kind of funny that people cannot even imagine this being the bottom. Just looking at this chart, it could be, in my opinion. I said the same thing when we were trading at 18, 19K. So yeah, I think it's just this kind of weird time where it's really, really hard. It was easier lower, and then now it's just kind of, you have to, if you're very, very strongly convicted, you hold and you have your invalidation levels, which are now for most people, I hope, in profit, right? And you just stick with that, or you just sell into resistance and hope it doesn't rally too far from you, but it could.
The hindsight narratives will be, if this was the bottom, extraordinarily simple. You'd be like, how did I not realize this was the bottom? Or they won't say they'll say, how did you not realize this was the bottom?
Yes.
Like it was so obvious. Didn't you see all the things like peak, economy fears and 3AC liquidation? Kathy even sold the bottom of, all her precious pet bags. All the different narratives that you look at, like if that was the bottom, it will be so obvious. It always is, but we should remember back to now where we don't freaking know. Like it's still complicated, and that's the way it is all the time. It's tough. That's why they call them like a wall of worry when you climb out of the bottoms. So we don't know. We're trying, taking it week by week, and we appreciate y'all being here with us. We'll leave it there. We really do appreciate everybody joining us. It's a lot of fun having you hanging out. Be sure to check us out on weeklyopen.com for past episodes. Hey, hit subscribe and like and all that crap on YouTube. We need to pump this show up. Go to weeklyopen.com/FTX to check out our partners over at FTX. You can trade directly from one asset to the other with 0 fees. Track your portfolio. Even check out what they've got with stocks and a bunch of other great features on FTX. weeklyopen.com/FTX. Thanks to you and thanks to them. We'll catch you next time. Bye.